he was his usual self in terms of entertaining, and he's very quotable. But in terms of what he would do differently if we went into a recession, he said that he would welcome it, and that kind of runs contrary to what most people believe, that Berkshire Hathaway does better when the markets decline, not when we've had a historical bull market in the last decade or so.
Certainly a time for Berkshire historically to pick up beaten down stock bargains. Dom Chu, he talked a little bit, and Steve, he talked a little bit about bonds versus stocks. And here again, no surprise, he likes stocks.
Well, when interest rates are this low, right? I mean, he said if the lower interest rates go, the more attractive stocks become, because you don't get that kind of return from bonds, especially longer term. And he's been the guy that over the long term has always said, 5, 10, 20, 25, 30 years from now, stocks are going to do the best out of any other asset class out there. So again, no surprise there. What I thought was curious was one of the valuation points he brought up. The market overall may not be overvalued, but he said, I could find something better to put $25 billion into than the Lyft IPO.
That's what I was, yes.
Yeah, and so maybe that was a little bit, interesting to me. And again, not surprising from a value-oriented man like Warren Buffett, looking at a company that last year lost $911 million.
Right.
And is now going public with a valuation possibly between $20 and $25 billion.
Those comments really made me chuckle. He talked about how the only IPO he'd ever bought into was Ford Motor in 1955.
Right.
And here's the quote from Warren Buffett on initial public offerings, including Lyft's tomorrow. He said, buying new offerings during hot periods in the market, I don't think it's anything the average person should think about at all. Now, he reserved the right to change his mind on these companies as they list, and maybe the business model looks a little more attractive. But to your point, Dom, that's when he said for $25 billion, there's a few other things that I'd like instead.
I mean, the overall picture is the Warren Buffett that we've all kind of come to know is the guy who likes to buy things that he understands, buy things that he knows. It was a big deal when he started to get into technology stocks like IBM or even Apple, which is one of the big positions they have now. So the idea that he's pivoted towards technology, interesting there, but he's still maybe not going towards the Lyft IPO.
Steve, he's a free trader.
He sure is. I thought the other just make a quick remark about the line of the day, which is the one he said about, I hope I live to see a bunch of recessions.
Yes.
And I would like to second that emotion. I think we all kind of feel that way. And you remarked earlier that he said that it doesn't change. In fact, there are a bunch of companies that do it very well. They look for these sort of opportunities. But he did say the economy is slowing, worthwhile. It doesn't mean anything to him. It might mean something to others out there. He sits across a variety of companies. He's got great visibility on the economy from the rail business to the insurance business to the real estate business, and he sees it slowing down, but doesn't see a huge slowdown in the offering. I think that's
Robert, you wanted to jump in. Go ahead.
Yeah, I thought one other surprise is that he embraced American Airlines of borrowing $1 billion to buy back their stock. And I thought that was mildly surprising. He does like it when companies buy their stock back when they're trading below their value, but actually borrowing money to buy it back was a mild surprise to me.